Dinar Shift viewers, good evening and welcome to a critical edition of our special report, where we dissect a major policy shockwave emanating from the Central Bank of Iraq, CBI. Just as many long-term investors settled into a familiar holding pattern, the CBI delivered a statement that has sent thousands scrambling, instantly freezing the financial landscape surrounding their dinar investments. This sudden authoritative move has thrust the future of these holdings into sharp, immediate question, forcing a necessary and often painful re-evaluation for those who have patiently awaited a potential currency revaluation for years. The dreams of immediate financial breakthrough, held by so many in the investment community, now hang precariously in the balance, shifting from a near-term possibility to a deeply uncertain, long-term prospect that demands a fresh perspective. The core of this policy is an immediate and indefinite freeze on the current official Iraqi dinar exchange rate, which stands at approximately 1,320 dinars per US dollar. This decisive action, coming from the bank commonly known as the CBI, hit the investor community as a complete surprise, fundamentally changing the dynamic for those who have spent years monitoring and responding to persistent speculation about a possible currency revaluation. The freeze is being implemented as a key component of a much broader, comprehensive economic stabilization strategy, explicitly aimed at aggressively reducing harmful currency volatility during a period marked by significant and unpredictable global uncertainty. This swift decision has ignited intense discussions across every financial forum, social media group, and private investor network, as holders urgently attempt to interpret the profound meaning behind the central bank's unilateral action and its implications for their held assets. This is not a subtle move. It is a clear institutional declaration of intent to prioritize stability. The immediate reaction across investor communities was both swift and deeply emotional, acting like a catalyst that split holders into distinct strategic camps, each exhibiting a different tolerance for risk and a unique interpretation of the news. We've witnessed a rapid escalation of panic selling as the initial wave of fear took hold, with some individuals rushing to liquidate their dinar assets at minimal gains or even small losses. Simultaneously, a highly disciplined group has opted for the wait-and-see approach, believing this action is merely a strategic pause, preceding a more structured and robust reform. A third, smaller cohort has greeted the decision with renewed optimism, interpreting the freeze as a crucial foundational step toward achieving genuine, long-term economic stability for the nation. This divergence in response highlights how emotionally charged investment decisions can become when a major central bank policy is changed abruptly and without significant warning. Analysts examining the CBI's move point out that rate freezes are frequently implemented when a nation is confronting severe internal economic pressures or navigating periods of heightened political uncertainties. This operational pattern strongly suggests that Iraq's monetary authorities are making a calculated choice. They are prioritizing the crucial goal of financial stability and predictability over any immediate, short-term currency gains that might arise from speculation. For the vast number of dinar investors, this fundamental shift in policy mandates a difficult but essential adjustment of expectations. The previous hope for a near-term currency appreciation must now be replaced by the understanding that immense patience will be required as the country continues to navigate a complex array of both internal and external economic challenges that demand a measured, stable response. We can categorize the immediate investor reactions into three well-defined strategies reflecting divergent psychological and financial approaches to risk. The first and most visible category comprises the panic sellers. These individuals have definitively concluded that the freeze signals the long-awaited revaluation is either permanently off the table or delayed so far into the future as to be irrelevant to their current portfolio. Their strategic response is immediate liquidation of their dinar holdings, often accepting less than ideal prices, as they seek to rapidly reallocate their money into alternative investments perceived as more secure or possessing higher liquidity in the immediate term. The anecdote of one investor reportedly selling millions of dinars just hours after the announcement perfectly illustrates the powerful, immediate motivation of fear, uncertainty, and the desire to protect capital in the short run, showcasing the volatility of market sentiment. The sheer volume of selling from this first group represents a significant portion of the initial market reaction and is driven primarily by the acute psychological stress of seeing years of patient waiting seemingly come to an abrupt halt. Their actions, while perhaps understandable from an emotional standpoint, serve as a stark reminder of how challenging it is to maintain a long-term, rational perspective when a central bank delivers a major and unexpected policy change. The drive to immediately sell, even at a loss, is rooted in a belief that the freeze definitively signals an indefinite delay, effectively removing the short-term speculative thesis for holding the currency and pushing investors to seek faster, clearer opportunities elsewhere in the global markets. The second, highly contrasting group consists of the wait and see participants. These disciplined individuals are making the conscious choice to maintain their current dinar positions while committing to a period of careful, vigilant monitoring of the developing situation. Their strategy is informed by a more nuanced understanding of central banking history, recognizing that freezes are sometimes deployed as strategic precursors to much larger economic adjustments, such as deliberate, structured revaluations or comprehensive currency reforms. For this segment, the policy is interpreted not as a definitive negative, but rather as a necessary, strategic pause that could ultimately benefit those willing to remain patient and ride out the initial market turbulence. By deliberately maintaining their positions, these individuals are essentially making a calculated bet on the belief that the current emphasis on systematic economic stability and meticulous policy planning will inevitably lead to a more sustainable, credible, and ultimately meaningful increase in the dinar's intrinsic value over time. This particular approach demands a significant level of discipline, ongoing research, and a firm willingness to accept prolonged uncertainty, qualities that can be profoundly difficult to maintain for investors accustomed to expecting more immediate financial outcomes or quick speculative returns on their capital. Their conviction lies in the long-term structural improvement of the Iraqi economy. The third, smaller but notably distinct cohort is comprised of the renewed optimists who have actively chosen to embrace the rate freeze as an overwhelmingly positive institutional development. These investors view the CBI's decision as a tangible sign that Iraq is fully committed to taking serious, decisive steps toward establishing long-term economic stability and foundational strength. Their perspective centers on the idea that freezing the exchange rate is the most effective way to eliminate immediate, destabilizing speculative volatility, thereby granting the country the necessary time to rigorously strengthen its monetary policy framework before any significant currency adjustments are seriously contemplated or enacted by the authorities. From their point of view, the fostering of clear economic predictability is a powerful tool that may actively attract crucial foreign investment, boost domestic business confidence across all non-oil sectors, and ultimately create a stable economic environment in which any eventual revaluation would possess far greater credibility and be inherently more sustainable. Investors in this group are often observed adding strategically to their dinar holdings, viewing the freeze not as a frustrating setback, but rather as a necessary and essential preparatory step that could pave the way for more meaningful, deep-seated gains in the distant future, albeit on a considerably longer timeline than most initially anticipated. Their focus is on the structural health of the nation's finances. Beyond the actions of these three investor types, a substantial body of speculation has emerged concerning the broader strategic implications of the freeze, including theories suggesting potential coordination with major international financial institutions. Some theories posit that Iraq is actively aligning its currency policy with broader global economic pressures or is specifically complying with advisory guidance provided by influential organizations such as the International Monetary Fund, IMF. While these claims often lack specific official confirmation and remain largely speculative, they serve to highlight the complex and powerful interplay that exists between a nation's domestic economic management and the formidable global financial systems within which it operates. Financial analysts widely observe that countries that find themselves under intense international economic scrutiny are frequently compelled to adopt policies like exchange rate freezes, as a clear demonstration of fiscal discipline and institutional control over their currency stability to the global community. Regardless of whether or not the specific claims of direct coordination are accurate, these macro-level considerations underscore the absolute importance for investors to continually evaluate the broader macroeconomic, geopolitical, and institutional factors when attempting to assess and forecast the future financial prospects of the dinar. The dinar's fate is not sealed by domestic policy alone, but by its global context. Seasoned financial experts consistently emphasize a key historical point. Currency freezes are not inherently permanent obstacles to an eventual currency revaluation or appreciation. Historical evidence drawn from the experiences of numerous other nations clearly demonstrates that such freezes can endure for a highly variable duration, ranging from a few months to several full years, after which a gradual, controlled appreciation of the currency may eventually occur. The example of Kuwait is often cited, which froze its currency rate in 2008 during the severe global financial crisis and maintained that specific freeze for over a year before finally permitting a carefully controlled increase in value, illustrating a non-permanent policy response. In the case of Iraq specifically, financial experts and economists predict a potential duration for the current freeze that could span anywhere from 6 months to 2 full years, a wide range heavily contingent upon improvements in both internal domestic stability and external global economic conditions. A solid understanding of these historical and predictive patterns is crucial as it helps investors establish realistic, achievable expectations and construct strategic investment plans that fully account for potentially extended holding periods, effectively pivoting their focus away from the speculative hope of immediate gains toward a commitment to a patient, long-term outlook. One of the most critical and unavoidable factors driving Iraq's decision to freeze the rate is the country's profound, deep-seated reliance on volatile oil revenues. Global oil prices have historically been the single most dominant force shaping the health and direction of the Iraqi economy, and sudden fluctuations in these massive global markets inherently create a powerful instability that directly impacts currency values. By maintaining a strictly fixed exchange rate during these inevitable periods of commodity volatility, the CBI is actively attempting to shield the dinar from any sudden, drastic devaluation, thereby providing a much-needed, highly predictable financial environment for both domestic businesses and ordinary Iraqi citizens alike, which is a key mandate for the central bank. However, the pursuit of this domestic stability, while beneficial for internal planning, also carries a potential cost in terms of international competitiveness. Should the currencies of regional trading partners fluctuate significantly while the Iraqi dinar remains artificially fixed, Iraqi exports could become comparatively more expensive on the global stage, a development that could negatively affect the nation's overall trade balances and external accounts. Investors tracking the dinar must fully consider these specific economic dynamics when assessing the long-term implications of the freeze and the ultimate potential for returns on their holdings, recognizing the inherent trade-offs between domestic stability and global market fluidity. The issue of political stability represents another fundamental, non-negotiable factor heavily influencing the CBI's calculated decision. Iraq continues to grapple with ongoing, intricate internal conflicts and persistent governance challenges, a situation that makes the implementation of any major, disruptive monetary change, such as a large-scale currency revaluation, an inherently risky action without broad, unified political backing. Initiating a sudden revaluation under highly unstable political conditions could easily lead to severe, unintended economic consequences, including the rapid escalation of inflationary pressures or a major outbreak of generalized market panic. The freeze acts as a safety mechanism. The current rate freeze effectively allows the nation's policymakers to maintain tight, necessary control over currency movements, while concurrently providing critical time and space to address, manage, and resolve deep-seated internal political and security issues. Investors who fully recognize and appreciate the inseparable link between a nation's political stability and its monetary policy are significantly better positioned to accurately anticipate potential future changes and respond to them in a strategic, measured manner. In this specific light, the freeze is not merely a negative event, but should be viewed as a sober reflection of the complex economic and political realities that the country must competently manage to secure and ensure genuine, sustainable long-term economic growth. The immediate and profound role of investor psychology in the market's response to the CBI announcement cannot be overstated. The emotional impact of having a long-anticipated revaluation seemingly delayed indefinitely has resulted in widespread feelings of frustration, deep disappointment, and in many cases, significant personal anxiety among long-term holders. Online forums and various investment communities have become saturated with personal narratives, conflicting strategic advice, and intense, emotional debates over the difficult, personal choice of whether to hold firm or initiate a sale. While these acute emotional reactions are completely understandable given the circumstances, financial experts consistently caution that investment decisions driven purely by emotion frequently result in sub-optimal or even financially damaging outcomes that may regret later. Investors who are able to successfully maintain a calm and strictly rational approach, systematically assessing their actual risk tolerance and the overall diversification of their existing strategies, are statistically more likely to successfully navigate this extended period of uncertainty and volatility. Recognizing and actively managing the powerful psychological effects of such major market moving news can be every bit as important for long-term financial success as having a complete and technical understanding of the underlying economic fundamentals themselves. The ability to separate emotion from action is key to surviving the current market shock. For any new investors who may currently be considering making an initial entry into the Iraqi dinar market, the implementation of the indefinite rate freeze fundamentally and irrevocably alters the entire risk-reward equation. Previously, some speculators may have entered the market with the explicit hope of achieving rapid, substantial gains via a near-term revaluation event. With the rate freeze now firmly and officially in place, those specific expectations must be completely discarded and adjusted. The potential for quick, aggressive profits has been effectively removed, thereby firmly transforming dinar investment into a decisively longer-term proposition that demands immense, sustained patience, rigorous ongoing research, and a high continuous tolerance for uncertainty and extended holding periods. New and existing investors are now compelled to carefully weigh the opportunity cost of holding the dinar, meticulously comparing its projected long-term returns against a multitude of other available investment options across various global financial markets. In this new, fixed-rate environment, the primary focus of investment strategy shifts definitively away from short-term, high-risk speculation and squarely toward disciplined, long-term strategic planning, where the timing of eventual reforms and the stability of the entire market play critical, shaping roles in determining final outcomes. This change in focus necessitates a fundamental pivot in investment philosophy for all participants. From a purely economic viewpoint, the currency freeze provides tangible, systemic benefits that extend far beyond the narrow scope of individual investor strategies. Stable, predictable currency rates are a highly effective tool for significantly improving business confidence and actively encouraging essential foreign investment, thereby establishing a far more predictable operating environment for all companies, both domestic and international, that operate within Iraq. Investors and companies alike gain the ability to plan their complex budgets, negotiate long-term contracts, and initiate significant capital projects with substantially less concern about the disruptive, crippling effects of sudden, volatile currency fluctuations that characterized the past. This enhanced stability has the potential to create a highly positive, cascading economic effect across the entire broader Iraqi economy, fostering sustainable growth in vital non-oil sectors, including retail, construction, and various services industries. However, it must be acknowledged that this stability is a double-edged sword. While it successfully reduces unwelcome volatility and uncertainty, it may simultaneously limit the necessary flexibility of monetary policymakers, hindering their ability to rapidly and effectively respond to unpredictable external economic shocks or rapidly changing market conditions. Understanding these inherent trade-offs is essential for anyone closely tracking the Iraqi dinar and attempting to accurately forecast its potential future value. Financial experts have also consistently highlighted the powerful role of international pressures in driving the central bank's ultimate decision to freeze the rate. As previously noted, Iraq has been under sustained high-level scrutiny from major global financial institutions, which have consistently urged the nation to maintain strict fiscal discipline and decisively stabilize its national currency. The implementation of a rate freeze can therefore be accurately interpreted as a clear act of official compliance with these international recommendations, signaling a formal and public commitment to prudent, responsible economic management that is visible on the world stage. Historically, countries facing similar international pressures have often found that such stability measures help immensely to build critical confidence among global investors and lenders, thereby creating a solid foundation for an eventual, controlled and credible currency strengthening. Therefore, while the freeze may temporarily delay the immediate gratification of a revaluation, it could ultimately contribute significantly to a far more sustainable, controlled, and well-regarded adjustment process when the underlying economic and political conditions finally align and allow for such an action to take place. Investors must recognize that this pivotal decision is not solely about domestic Iraqi concerns, but also about how the nation strategically positions itself and interacts within the highly demanding global financial system. The overall trajectory of Iraq's monetary policy will remain profoundly influenced by the continuous and interconnected interplay of global oil price fluctuations, regional geopolitical conflicts, and persistent domestic political uncertainty. Any significant, material changes in these three specific areas could dramatically influence the ultimate duration of the current rate freeze or critically affect the eventual timing of a potential currency revaluation. For example, a prolonged period of sustained, high global oil prices might instill the necessary fiscal confidence in policymakers to allow for measured, gradual currency adjustments, whereas a continuation or escalation of regional instability could regrettably prolong the current freeze indefinitely, cementing the fixed rate for an extended period. Therefore, for investors who are committed to making genuinely informed and strategic decisions, the meticulous monitoring of these primary macroeconomic indicators is absolutely essential. Staying comprehensively updated on both specific domestic Iraqi developments and the broader international context provides a far more accurate and well-rounded picture of both potential risks and tangible opportunities, allowing investors to strategically adjust their complex holding strategies as geopolitical and economic conditions continue to evolve over time. This continuous situational awareness is vital for minimizing unexpected financial surprises. It is critically important to reiterate that the principle of diversification remains the foundational pillar of all sound investment practice, particularly when dealing with highly volatile or purely speculative markets like foreign currency. Strategically holding only a prudent portion of one's total portfolio in dinars while maintaining other substantial, stable investments in more traditional asset classes such as stocks, bonds, or real estate is the most effective and responsible way to significantly reduce overall financial risk and exposure. Those individuals who are financially prepared and structured to handle an extended period of uncertainty are inherently better positioned to weather both the emotional and economic impacts of sudden, major policy changes like the CBI rate freeze without suffering catastrophic portfolio damage. Conversely, investors who have placed a disproportionate and over-leveraged reliance on the single performance of a single currency or asset face significantly higher and more painful setbacks if their original expectations for a quick profit are not met. A sound, disciplined, and sustainable investment strategy demands a careful and rational balancing of the potential for high reward gains with the very real, often underestimated likelihood of prolonged delays, unexpected freezes, or other unpredictable, high-impact events that are beyond the control of any single investor. Looking ahead, the central and most pressing question for all dinar investors is whether this official rate freeze signals the definitive and permanent end of the revaluation prospect, or if it merely constitutes a lengthy, strategic, and temporary delay. While absolute certainty is impossible in any speculative market, Historical trends from other nations strongly suggest that currency freezes are not permanent blocks to eventual appreciation or reform. Past global examples clearly indicate that once a nation's underlying economic conditions achieve sustained, structural stability, its currency may then begin a measured, gradual, and controlled increase in value, avoiding the volatility of a sudden shock. For those currently holding dinars, a practical, rational approach involves a rigorous evaluation of their personal financial capacity, their true risk tolerance, and their foundational investment goals. Investors must ask themselves difficult, honest questions. Can I realistically afford to have this portion of my capital tied up for a potential period of several more years without impacting my life goals? Has my original rationale for investing in dinars fundamentally changed based on these most recent policy developments? Carefully considering these critical questions helps investors make informed, analytical decisions rather than simply reacting to the market news emotionally. The continuous review of alternative investment opportunities is also a prudent and responsible step. Some investors may rationally decide to liquidate only a strategic portion of their dinar holdings while deliberately retaining a smaller, core exposure to benefit from any potential long-term gains that may eventually materialize. Whatever final approach is taken, the guiding principles of clarity, financial discipline, and objective analysis must be the sole factors driving every single decision made in this new, fixed-rate environment. In conclusion, the Central Bank of Iraq's decisive action to freeze the official exchange rate has successfully generated a complex, mixed environment of concern, necessary caution, and a degree of cautious optimism among investors globally. While short-term expectations for a quick revaluation have been significantly dampened, the move is a core part of a broader, well-defined economic stabilization strategy that could potentially support far more sustainable, structural growth over the extended long term. Investors must adjust their expectations, strive to understand the multifaceted factors driving the CBI's policy decision, and prioritize diversified, meticulously researched strategies. The ultimate financial future of the Iraqi dinar remains inherently uncertain, but by staying comprehensively informed and consistently patient, investors can navigate these complex, evolving developments with a higher degree of clarity and necessary confidence. This is undeniably a pivotal, defining moment for the dinar market, and a complete, contextual understanding of the entire situation is absolutely essential for anyone considering buying or selling the dinar in the coming months and years.